This is a presentation which is an extension of our previous or roadshow that we just finished running a few months ago. My name's Brent Irvin. I will be running or taking the presentation today. So look, there's two really specific examples that I have as to why a fixed asset system is a good idea over a spreadsheet. And just before I go through those examples, it comes down to managing risk. So for the majority of businesses today, typically fixed assets are managed in a spreadsheet, and the reason that fixed assets are managed in a spreadsheet is because typically it's something that the accountant does for depreciation and, dare I say it, tax minimisation at the end of each financial year. And a number of business owners don't then go to the next stage, which is actually thinking about managing those assets on an ongoing basis and also managing risk. And when I talk about managing risk, what I'm talking about is one example, which is a positive example, is that we've got a client based in Sydney who's a restaurant, and they had an unfortunate situation where their restaurant caught fire and burnt down. Now, luckily for them, they did use a fixed asset system, and dare I say it, it was our Attache fixed asset system, which was great. And because they used our fixed asset system and because they had very detailed records on what their fixed assets were, they were able to make a claim to their insurance company in record time and have that money back in their bank account to start the process of rebuilding their restaurant within a matter of days. Now, as an extension of managing that risk, because they also had good financial reporting systems in place, dare I say it, the Attache financial system, what that enabled them to also do was to be able to make a claim for lost revenue because they could accurately report on what the lost revenue was. And so from a lost revenue insurance claim perspective, they could also claim that in record time. The second example that we have in terms of why you wouldn't use a spreadsheet for fixed assets is an unfortunate example. It's one of our clients that are based here in Auckland in New Zealand, which is the office that I'm personally based out of. The client was a niche market supermarket business. They had a situation where they did use a spreadsheet for their fixed assets. Unfortunately, 3 years ago, some muppet scorted the original cost price column of the spreadsheet, and then they saved it. So unfortunately, what then happened, of course, was you ended up with mixing bowl, original cost price $35,000, Mitsubishi Ute, original cost price $200. And what that led to was inaccurate reporting of depreciation to the New Zealand Inland Revenue Department, which is obviously the New Zealand version of the Australian Tax Office. So for 3 years, the clients had inaccurate tax records that have been submitted to the tax office. What that's then meant is that the client has then had to spend over $100,000 getting their fixed assets audited. Now, transparently, it's a relatively significant business. They're turning over somewhere in the vicinity of $25 million a year. But nevertheless, it's a significant amount of money for the client to have to spend, all from the point of view of if they'd had a proper system, in inverted commas, that managed their fixed assets, number one, they wouldn't have inaccurately reported to the Inland Revenue Department, which means that they wouldn't have had to then pay penalties on the tax that they haven't paid that they should have. Number two, they wouldn't have had to spend $100,000 on audit fees from their new accountant. They, funnily enough, replaced their former accountant with the current accountant because of what happened. And basically, they just would have saved themselves a whole lot of stress and a whole lot of agony. So I don't want to put the big black cloud over something like fixed assets, but what I would say is that from a managing risk perspective across Australia, we've had a number of bushfires and so forth recently. Through New Zealand, we've obviously had some floods and we've had earthquakes and things like that. In business today, we need to allow for those catastrophic situations to occur. The building burns down, we have an earthquake, so on and so forth. And what plans and what contingencies do we have to make sure that we can make that insurance claim process as painless as possible to ensure that we can get back into whatever it is that we're in the business of doing. So look, on from there, in terms of why you would look to use the Attache Fixed Assets system particularly, let's start right at the beginning. If we have a look at how our fixed assets are set up, what we have is, in our first screen that we're presented with here, we've got obviously the description of the product, which is obviously handy, what the asset costs and so on and so forth. We've then got 4 layers of groupings. Now, the 4 layers of groupings are important because if we think about having, for example, different branches, we can then manage assets across branches. So again, rather than just using a fixed asset system for depreciation only, it does come back to an audit tool as well to be able to say that this asset is located in this particular branch of the business. If we come down then through the different groupings, we've got categories, we've got departments, and we've got cost centres. So without going into the huge detail today, we've got 4 levels of groupings to be able to accurately identify where in the business a particular asset is located. When we then move across to the contacts area of an asset, this is where the insurance and warranty information is stored. So this is obviously very handy around which supplier did we purchase this particular asset from, what was the invoice number that we purchased it on, who's it insured with. Our general manager, Matt Paff, had an unfortunate situation a few months ago. He was involved in a car accident. He couldn't remember which insurance company his car was insured with because he's got a number of vehicles and each vehicle's insured with a different company. So the ability to be able to record that this asset is insured by this company, again, speeds up the claim process. And then we look at other useful information such as valuations, replacements, etc., just in terms of dollar values and the and what they are valued at the moment. When we have a look at the depreciation methods, in the Attache Fixed Asset system, we allow for 3 different types of depreciation. One type of depreciation will always be the depreciation that is used for financial reporting purposes, so you'll determine that in conjunction with your accountant. That's what flows through to your financials ultimately, and it's then the depreciation that's used for year-end reporting. The reason that you've then got 2 other forms of depreciation is that if you're using fixed assets from an ongoing management point of view, obviously depreciation from a dollar value point of view gives you a useful life time frame, and that's the amount of money that you can write that asset off each year at. However, the useful life in practical terms of an asset might actually be shorter than the financial useful life, if that makes sense, or it might be longer. So if we take the example of a computer's typically disposed of or written off over a 3 to 4 year period. However, depending on what role the computer is used for in the business, the computer's practical useful life might extend to 4 to 5 years. So it's the ability to be able to have a financial tax minimisation depreciation cost, if you like, and then also be able to manage that asset on an ongoing basis by being able to say practically this is how long the asset will last and this is when I therefore need to look to replace it. If we then move across to our balances and activities tab, that just shows us what the original cost price of the asset was, what the movement has been in terms of money so that we can understand what that asset is valued at currently and how we've arrived at that particular figure. The last tab is a custom information tab. In the example that we're using here today, it's labelled loan info. However, you can label that tab whatever you want to label it. So if you would like a photograph of the asset to be able to identify it more easily, or any other information that's not able to be easily stored anywhere else against the asset, you can use these fields. You can label these fields whatever you want to label them, and you can enter whatever information that you choose to enter on them. So that's the basic setup of an asset. From there, what we can then do in terms of managing our assets on an ongoing basis, obviously there's a number of transactions that we can run with our assets in addition to just simply the monthly depreciation, which we'll go through in a second. But basically what we've got the ability to do is to activate an asset. So this is the scenario where we've just purchased an asset, we've created that asset in our fixed asset system, and we're now wanting to tell the fixed asset system that this is a live asset in inverted commas that we would like to now include in the depreciation run on a monthly basis. We can then dispose of an asset, which is where you've either sold the asset or you're writing the asset off for whatever reason. We can then do a depreciation rate change if we need to, a revaluation for whatever reason, a special depreciation to either catch up or just simply change the amount of depreciation that's been added, or we can transfer an asset. And so transferring an asset is the ability to take it from one location to another, from one group to another, and so on and so forth. The reason that that's important is, well, there's two reasons that that's important. Number one, from the management, practical day-to-day management perspective, we can determine where that asset sits within the business. And number two, that flows through to the actual financial reporting side of things, and we'll cover the financial reporting in a little bit more detail in just a few minutes. So that, in simple terms, are the main things that you can do on a transactional basis with the fixed asset system. The primary thing, to be frank, that you will do with fixed assets is a depreciation run. So this is the situation where once a month you will, as part of your monthly update of the financial reports, you will simply come into the system. The first couple of runs, we typically suggest that you would run in what we call query mode, which literally brings you up each individual asset and says, this asset's going to be depreciated by this much, is that okay? And you select yes. Now the reason you do the query mode the first 2 or 3 times is to make sure that all the depreciation rates are correct and that type of thing. Once you are comfortable that the depreciation rates are all correct, you'll simply choose automatic in terms of the depreciation run. You'll then select accept, and the system will go through and literally create the general ledger journals that you need to do depreciation for one asset, 5 assets, or your entire asset base, depending on what you're selecting. So all nice and simple, nothing complex about it. You don't need any particular financial knowledge around fixed assets or anything like that. Where you will require some financial knowledge, or where you will require some assistance from possibly your auditor or somebody like that, your accountant, will be around this particular asset has got this particular depreciation rate, and this is how it needs to be set up. That's the only input that you would need from an external party. So then, once we've talked about the depreciation, the other main reason that you would use the fixed asset system is to be able to utilise what we call our service diary. So the service diary, as the name suggests, is the ability to be able to say, we've got an asset called the Honda car, and we want to create something called a warrant of fitness and full service, so that we can be reminded to actually make sure that we get that particular job done. So if we take a practical example, or a different practical example, you might be a business where you've got a number of electrical machinery items, where those machinery items that are the electrical machinery items need to be tested to make sure that there are no shorts on the electrical cables or anything like that. They need to be certified on a periodic basis. Rather than doing that ad hoc and just simply ringing the electrical certifier when it's time for that particular asset to be certified, the ability to be able to record each individual asset and record the fact it needs to be certified means that you can then start to get that electrical certifier out altogether to do all the assets at the same time, rather than getting them out individually sort of 1 month after the other, and therefore increasing the cost of certification to the business. So in short, and because you've already recorded the purchase of the fixed asset, and because you are then depreciating the asset or managing the asset on a day-to-day and a month-to-month basis, being able to then use the service diary as an extension of that to be able to, again, minimise other external systems around managing the assets just makes life a little easier. So when we move on from the service diary things, the next major step is reporting, and the reporting is reasonably succinct within the fixed asset system. So we start off with things like the asset details report. So as the name suggests, this is just literally a list of all of the fixed assets that all of the fixed assets that we've got on the system. We can obviously filter, as you will have seen on the filtering screen, but it basically just gives us a detailed list of all of the fixed assets that we've got at the moment and where they're at from an accumulated depreciation point of view. We can then have a look at other reports. So we do have, as an example, things like the asset summary report, which lists the summary version of the detailed version that we just had a look at. We've then also got quite a useful report, which is the asset replacement report. Asset replacement report, as the name suggests, is I'm practically on the CFO or I'm one of the senior managers in the business. It's now December and my end of financial year is March, and I'm looking to put together the 2015-2016 budget for the company, and I'm needing to know which of my assets from a depreciation perspective are coming to the end of their useful life, so therefore what fixed asset purchases do I need to plan for in my next financial year's budget. So what we can see here, if we go through on an individual basis, is the fact that we had some Dell Vista desktop computers. They were purchased in 2007, original cost price of $15,199, and based on the depreciation rate and method that we've set up against that particular asset, they're due to end their useful life on the 5th of July 2012. So if we think about that from a CFO role, from an external accountant role, or from a senior office manager role, the ability to be able to determine when those assets are coming up for replacement doesn't physically mean that or literally mean that we actually have to replace the assets at that particular time, but it does give us a far better indication of what we need to be doing, and so we can start planning our cash flow in advance for the coming 12-month period. So then, in terms of the day-to-day management, that's basically the fixed asset system. The last area that I wanted to cover was simply how we then integrate with the general ledger. So if we have a look in the background of the system here, what we've got is we start with our general ledger sets, and as we can see here, each general ledger set has got a number of account codes that it points to. So for each group of assets, which we can see here in this particular example, we've got a very simple example, which is furniture and fittings, other assets, motor vehicle, plant and equipment. So for each of those groups of assets, where do you want the cost account, what do you want the cost account to be, where do you want depreciation to go, the depreciation expense in the profit and loss statement, where does that go, so on and so forth. So that then extends to the likes of, if for example you had if you had fixed assets which were in one location, and if your balance sheet showed fixed assets by location, you could set these general ledger sets up so that it moved the money from one location to the other location if you wanted to. So without getting into the huge technical detail, what I'm saying is that it's very flexible in terms of being able to set the asset up once, set this general ledger set up once so that we move the money around automatically, and then without much financial knowledge, simply set the asset up, load the relevant general ledger set to the asset, and then the rest of the system just takes care of itself in terms of where the money goes, how the money gets there, and then how to do the reconciliation. So when we think about the depreciation run that we did just a few moments ago, what would happen is that creates the general ledger posting, if you like, which is then obviously posted into the general ledger. So your fixed assets system becomes your fixed assets sub-ledger, if you like, in the same way that your accounts payable or your accounts receivable or customers, or your accounts payable or suppliers modules become the sub-ledgers to the general ledger. The fixed asset system becomes your fixed asset sub-ledger in simple terms. So the summary information gets sent through to the general ledger. The detailed information is then held within the fixed assets sub-ledger. So look, that's just a very brief summary this afternoon of the fixed assets system. What I'd like to do now, with just a few minutes left in the presentation, is just ask if there are any questions from the floor, please. So if you've got any questions about anything I've covered today, or potentially anything that I haven't covered today that you wanted to find out about fixed assets, What I'd ask you to do, please, is just on your panel, you've got a questions area on your panel. If I could just ask you to type the question in, and then we can provide the answer that you're looking for. Hopefully, he says, with tongue-in-cheek. I did run this presentation on Monday and I came up with a very good question. I was presented with a great question, which unfortunately and slightly awkwardly I couldn't answer, but that's okay. I subsequently got the answer and gave that back to the attendee, which was fine. So look, does anybody have any questions from the attendees today? Okay, we've got a question here that says, what's the price of the standalone fixed assets application? It's only $80 a month plus GST, and that's across Australia and New Zealand. Got another question here. How do we go about importing data from another asset register? It depends on particularly which asset register you're talking about. We do have a full conversion tool from an asset register called CatSoft, which a number of our Australian clients currently use. If you've got an asset register which is not currently CatSoft, then we do also have a Microsoft Excel template which we can provide as part of taking our fixed asset system on. So in simple terms, if you can export information from your current asset register, then plonk it into our error checking Excel template, we can then import that on your behalf. Just got another question here. Does the fixed asset system only work with Attache BI? No, the Attache fixed asset system will work with either of our current products, Attache Accounts or Attache Pro. Obviously it will work with Attache BI, which is our new technology product, and in fact it will also work with other financial reporting systems. So this is one of the examples at Attache that we have of what we refer to as Attache chunkification, where we take a piece of Attache and have the ability to provide that and have it work with any other system. So it's not product specific to Attache BI, and in fact it's not even product specific to our Attache Accounts, our Attache Pro or our Attache BI suites. It can be used completely independently and be plugged into any other systems. Any changes to the fixed assets module under BI? Looks exactly the same going by this webinar. The version that we're looking at today is unreservedly the Attache, the current version of Attache. Attache BI will be released through the course of this calendar year, and the Attache BI version 3 will have some extra enhancements and a new interface, yes. So how involved is the setup? Is it doable without consultants' assistance? Look, the setup of fixed assets is fairly minimal, to be honest. We have a lot of online material to assist with the implementation of fixed assets. The only time that a consultant would be required would be if you're requiring more more business advice around how to structure your fixed assets and the best way to report on your fixed assets and that type of thing. So if it's just simply a matter of we've got some fixed assets in a spreadsheet, and the first thing that we want to do is to just simply get them out of a spreadsheet, get them into a fixed asset system and be able to manage them a little bit more efficiently, that's something that can be done quite simply by yourselves with minimal input. There will always be input from the Attache consultant, but it won't be a huge amount of assistance required. That being said, what we do typically find with our own client services team, with our own team that supports our clients directly, is that what most businesses are looking for is some assistance around how do we efficiently group the assets together, how do we then manage them most effectively so that we can get the biggest benefit from the fixed asset system. That's the major reason that you would look to engage with your Attache consultant. So we would recommend that you would have Attache consultant involvement, but certainly there's no huge requirement for them to be hugely involved depending on what it is that you're looking to achieve. And with that, I thank you for your time today and look forward to seeing some of you soon in the future. Thank you.